Hey everyone, welcome back to Everywhere We Belong for episode 3. I'm your host, Micah, and today we'll be exploring the latest and most significant updates for India in the technology and financial space across our news bulletin and main discussion before our community highlights and NRI Tip, curated of course, to make your life easier. To begin our news section, let's discuss what PayTM has been up to with the Department for Promotion of Industry and Internal Trade, DPIIT. In short, the DPIIT is a government department that's mandate is to implement industrial policies and facilitate foreign investments. It was formed in 1995. The DPIIT has formed a strategic partnership with PayTM to accelerate the growth of fintech and manufacturing startups across India. This collaboration, formalized through a Memorandum of Understanding, will provide entrepreneurs with crucial mentorship, infrastructure support, market access, and funding opportunities, with special emphasis on fintech hardware development. Under this initiative, PayTM will introduce dedicated programs for fintech hardware manufacturers, including Soundbox and POS service makers, while offering regulatory guidance and industry-focused workshops. Vijay Shekhar Sharma, PayTM's founder and CEO, highlighted that under Prime Minister Narendra Modi's leadership, this is the best time for startups to launch and scale, while DPIIT officials emphasized how this partnership strengthens India's position as an emerging global innovation hub, particularly in financial technologies. The Modi government is preparing to recommend a significant reduction in the share of central tax revenues allocated to states, according to sources with direct knowledge of the matter. The proposal would reduce the state's share from the current 41% to at least 40%, a shift that would provide the central government with approximately 35,000 crores in additional annual funding. It's interesting to note that despite this reduction, the share of tax going towards state governments has jumped significantly in the last few decades, from 20% in the 1980s to where it stands today, a doubling overall. This recommendation will be presented to the Finance Commission of India, led by economist Arvind Panagaria, which is expected to submit its binding recommendations by October 31st for implementation in the fiscal year 2026-27. The cabinet is likely to approve this proposal by the end of March. The central government reportedly cites increased spending requirements, particularly during economic slowdowns, as justification for the change. This proposed shift comes at a time when states already face limited revenue-raising discretion following the 2017 implementation of GST, while still bearing over 60% of total government spending, particularly in areas like health and education. The potential reallocation could significantly impact federal-state relations and state-level spending priorities. I can't imagine the individual states will be too happy with Modi on this one, folks. Let's move on to the first item in our main discussion, Gift City. Gujarat International Finance Tech City, Gift City, is a business district in Gujarat, India, that is home to India's first International Financial Services Center, in short, IFSC. It was the first of India's operational smart cities. You'll realize very soon why so many of us here at Belong are so excited about it. I think now's a good time, though, to remind you that I, Micah, noob in finance, am growing with you in understanding this technical and nuanced field. So don't let all these abbreviations and numbers get to you. I'm with you through it all. Let's get back to why Gift City is cool. Traditional NRI investments in India have typically required setting up specialized bank accounts like NRE or NRO accounts. That stands for non-resident external and non-resident ordinary, respectively, accounts, which involve considerable paperwork and multiple visits to the bank. Gift City has streamlined all of this by creating a regulatory framework that allows NRIs to invest directly in its India-bound investment products through their foreign bank accounts. This is done via IFSC licensed entities. Gift City offers unique advantages to NRIs and foreign investors by functioning as an offshore financial center within India, similar to the DIFC in Dubai. Investments made through Gift City enjoy significant tax benefits, leading to higher in-hand returns. Additionally, transactions can be conducted in foreign currencies, eliminating the need for constant currency conversion, and reducing all associated costs. Through licensed companies, NRIs can access a variety of investment products including fixed deposits, US stocks, nifty derivatives, and alternative investment funds, all while operating in foreign currencies such as the US dollar. The tax implications and benefits therein include, for NRIs and foreign investors, complete tax exemption on interest income earned from deposits in IFSC banking units, IFSCs are areas where financial institutions can conduct overseas business, and the one in Gift City is currently the only one of its kind in India. There is no capital gains tax on Gift City-based AIFs, which stands for Alternative Investment Funds, and Indian Equity Mutual Funds. There is also no capital gains tax on securities transactions through Gift City exchanges. There is zero tax on derivatives trading income. This is profit or loss made from trading derivatives, which are financial contracts based on the value of an underlying asset. There is no securities transaction tax or commodities transaction tax. So if you're an NRI in the UAE, it's essentially tax-free, as the UAE is tax-free. This last bit of information is applicable to all the previous points, by the way. I should also mention, for the business owners, that there are tax incentives for business also, including GST exemption on services received by IFSC units. We're all quite intrigued by Gift City developments here, so we'll be covering their products and processes more in detail and their intersection with our offerings in later podcasts, no doubt. Let's move on to another exciting development that positions India at the forefront of digital sovereignty solutions globally: data embassies. India is currently in advanced negotiations with the UAE to establish what would be the UAE's first data embassy on Indian soil. This pioneering facility is expected to be located in Andhra Pradesh, marking a significant milestone in India's digital infrastructure journey. For our listeners working in international business or technology sectors, this development presents fascinating opportunities. Data embassies enable countries to effectively localize their data without subjecting it to foreign data regulations, a major advantage in our increasingly complex regulatory landscape. But what exactly is a data embassy? Think of it as a warehouse for a nation's most valuable digital assets. These specialized facilities allow countries to store copies of their sovereign data while maintaining complete control over it. It's essentially a digital extension of diplomatic premises, but instead of protecting people, it safeguards critical national information. The timing couldn't be more relevant. In today's increasingly volatile world, data continuity has become a national security concern. Whether facing natural disasters or geopolitical instability, nations need assurance that their essential digital infrastructure remains operational. Data embassies provide exactly that insurance policy. India's vision extends beyond just a single facility. The government is developing strategic zones specifically designed for data centers that can house sovereign data from multiple countries simultaneously. These zones will function similarly to traditional consular divisions, with the foreign embassy maintaining authority over privacy protocols, access rights, and data handling procedures, while India provides the physical infrastructure and security. This concept isn't entirely new, but India's implementation represents a significant scaling of the idea. Estonia was the first country to pioneer this approach back in 2007, following a devastating cyber attack that temporarily crippled its digital infrastructure. In response, Estonia established a data embassy in Luxembourg, where it now maintains a digitized backup of its citizens' information. Beyond the technical benefits, this initiative substantially enhances India's geopolitical standing. By positioning itself as a stable, secure destination for sovereign data storage amid global uncertainties, India is building diplomatic capital while developing cutting-edge infrastructure. For our NRI community, this represents another example of India's growing influence in the digital sphere, creating new avenues for technology partnerships, investment opportunities, and professional connections between India and the global Indian diaspora. As these data embassy negotiations progress, we'll keep you updated on developments and what they might mean for cross-border data governance, technological sovereignty, and India's evolving role in the global digital ecosystem. For this week's edition of Community Highlights, we will yet again be nicking a snippet of conversation from the NRI subreddit, as you and I are yet to begin conversing on email. Speaking of which, I personally am really looking forward to chatting and getting the on-ground scoop on your life. Let's get into it. User HappyRacer97, who is currently residing in England, asks, has anyone ever had their Indian interest income reported to HMRC in the UK? The fixed deposit in my NRE account has matured. I didn't declare it on my self-assessment as I had no idea I had to and have no plans to repatriate the money back to the UK. Will this be reported by the Indian banks or authorities to HMRC in the UK? They are referring in this instance to Her Majesty's Revenue and Customs, the UK's Tax, Payments and Customs Authority. User select bat 1996 replies with some key information. Indian banks and authorities don't report directly to HMRC. However, data may be exchanged between the two countries as they have a DTAA. That stands for Double Taxation Avoidance Agreement. He continues, it will be difficult to untangle for you if HMRC gets this info and the amount is significant. So please begin reporting from here on out. Report small or big gains, interest, rent, or other income gained outside the UK in order to be on the right side of the law. It's clear that all due declarations to both governments should be made, as being in the clear with regard to the law is the simplest and clearest way to go. Both the Indian Income Tax Department and HMRC do not take kindly to undeclared income. For Indian citizens, the penalty is 10% of undisclosed income of the previous year, and for citizens of the UK, it is a tax on that undeclared income plus a penalty worth up to double the tax you owe, a punishment best not experienced, in my opinion. Let me use this opportunity to remind you again that we're so excited to speak to you. Write in to us, but me specifically, at micah@getbelong.com. That's MICAH@getbelong.com. No spaces, no caps. It's now time for our weekly tip, curated to make your life easier. Were you frightened by what you heard in our community highlights this week? I understand. Fixed deposits can be a handful to set up as an NRI, but we're developing an offering that addresses just that and will save you so much effort and mental space. Not tax you on returns while facilitating your participation in India's meteoric growth story. I am of course referring to Belong's USD-based fixed deposit. It's almost ready for the public and will be available soon for setup on our mobile app around April, if all goes to plan. Our tip is that if you want to invest your money into India's assured growth with maximized returns, but without having to worry about taxes on returns, a quickly depreciating Indian rupee, repatriation to your country of residence, or setting up troublesome NRE or NRO accounts, our US dollar denominated fixed deposit is what you should invest in. We'll let you know once it's gone live so you can take an intelligent step in your financial journey with us. That's been this week's episode of Everywhere We Belong, and I must say, this one has been a pleasure. The only thing left to do is to begin communicating with all of you. Can't wait. My name is Micah. Thank you for listening. And on behalf of all of us at Belong, have a wonderful fortnight.